Hey, welcome back. We have Alan Nevin. He's the Director of Economic Research for the Xterra Group. Now, Alan is a specialist when it comes to real estate. If there's a big real estate project, companies don't do it unless they talk to Alan. So we've got him here to talk to us about, hey, our new president and what's going on in 2017 when it comes to real estate. Alan, welcome to the show.
Thank you, Steve.
I'm really glad you're here because you know what? Here we are. We're in November, and we got a month ago, and then we got 2017. So what do the folks have to look forward to when it comes to real estate in 2017?
I don't mean to be boring, but nothing will change.
Okay.
I see no evidence whatsoever that anything is going to change in 2017, regardless of who's president.
Well, let's talk about what's going on right now. Are we seeing, what type of appreciation are we seeing with real estate?
Well, it depends where you are.
Okay.
A lot of places, prices blossomed in the last couple of years, and now it's starting to level off. We're seeing that in a lot of the higher end areas, but in the areas that have moderate priced homes, the homes are still going up.
Okay, so we have some pockets of things going now. When it comes to loans, you know what? We have Janet Yellen. She's been threatening another rate increase. How's that going to affect home sales?
Well, I really don't think it will. First of all, I don't think she's going to raise it. She keeps talking every quarter, but it just never happens, nor should they, by the way.
Yeah, I don't disagree with that. No, the economy's not going anywhere.
No, it isn't. But here in San Diego County, business is good to the extent that we will, in 2017, gain another 30,000 jobs, just like we did in 16. And we're going to gain another 30,000 population, and they buy homes and rent apartments.
So right now in San Diego, we have a demand for 29,000, 30,000 homes a year.
Not really. No, demand's really on the order of 18,000 housing units. Now, we're only producing half that many, which is costing an awful lot of people to buy in Temecula and Murrieta. And we have about 30,000 folks each day who commute from Tijuana here because they can't afford to buy or rent here.
Okay, so basically the demand is causing people to spread to the outer areas to buy a home and commute into San Diego. And the values of the homes here are going to continue to rise.
They will.
Which is a good thing for homeowners, especially if they're looking to sell. New president's Donald Trump. Many people in the United States said, hey, we're leaving the country if Donald gets in. So, Alan, you know what? Where are they moving to? Where's the best place for real estate?
Well, probably Australia or New Zealand, which seems to be a fairly hot area. And frankly, buying in England now isn't a bad deal since the pound has gone down so far.
Since Brexit, yeah.
Right. But the reality is that Trump as president won't make much difference.
Why is that?
Well, there's not much he can do to make the country better or worse. He basically has to rely on Congress to make changes, and I think he would have a difficult time getting them to make changes.
I don't disagree with that. But now, one of the things that I know as a financial professional, I see it a lot, and we looked at the last 100 years of different presidents, and the reality is the economy actually makes the stock market, not the president. And the difference between return over the last 100 years is only about 1%, whether it's Democrat or Republican. So I was really interested in, you know, your idea there, and I thought it was kind of fun that so many people said they would leave the country if Donald got in. So,
well, I heard that, by the way, on previous presidents as well, and of course, no one leaves.
Oh yeah.
But the reality is that I don't see where President Trump will have any effect on housing prices or generation of jobs, for that matter.
Alan, thank you so much for being on the show. It's always a treat to have you. Most importantly, 2017, what's going on there with real estate makes a big difference to our viewers.
Good. I'm delighted.
Hey, stick with us. We'll be right back. Hey, you know what? We've got two issues coming here with the last 35, 40 days of the year. One, we've got Vanguard talking about low yields for the next 10 years here in the United States. Hey, that's a big deal. And secondly, hey, we've got 35, 40 days to figure out how to lower limit our tax liability, especially with getting IRA distributions, bonuses, all sorts of things are happening. So we brought a specialist. This is Don Meredith, Tactical Income. Don, welcome to the show.
Thanks for having me, Steve.
I'm glad you're here because you know what? This is a big time of year, especially for people who are getting bonuses. They think it's, hey, this is great. I'm getting a $200,000 bonus on top of my $200,000 income. Uh-oh, I'm in the largest tax bracket. How do I eliminate that? And you know what? You talked to me about tax-deductible investments. Tell me about those.
Well, how many times during the year, Steve, do we run into somebody who said, I wish I had known about that before they paid that huge capital gains tax? They could be selling a business. They could be, just getting a bonus, as you mentioned, or it could come from a variety of things. But now is the time to check with your CPA, not at tax time. They're too busy. This is when you can really make a difference. This is when you can look at what tax advantage investments are out there. Energy, what better tax write-off is there than energy?
Well, how does that work?
Well, you put your funds in, you determine, first of all, you have to determine where you're at with your taxes and what you're trying to accomplish. But it can absorb a large amount of, you may get a bonus that's strictly going to capital gains. Energy allows you to get up to a 92% tax write-off and get your principal back over 5 years. Yes, there's risk to be talked about and all that, but energy along with other investments that are tax advantage, real estate and some other things.
Hold on a second. You just said you can get 92% of your write-off. So that means if I take $100,000 out of my IRA, which I might not be using in the future, or probably not, and I put it into this energy tax-deductible investment, 92% of it I'm not going to get taxed on because I'm going to get a write-off?
85 to 92% is about average.
Okay.
What we see, it's called intangible drilling costs.
Oh, I see.
Now,
okay.
Yes, you need the price of oil to be behaving a little better than it has the past few years, but it is. But what's better, just paying the capital gains or getting a tax write-off and seeing your principal come back with yield over the next 4 or 5 or 6 years?
Oh, that's wonderful. Okay.
So you weigh that against the risk.
Now, here's the next thing. I think that's really important, but I really want to get to this because the people at Vanguard are saying, hey, we're going to have some really low yields here, below 5% over the next 10 years.
Yeah.
And that's kind of scary. So what are some of the things that people can do to get a better yield and maybe some additional tax advantages?
Well, I really sympathize with people they're trying to retire, they are retired, they're trying to get income, and they're trying to get them from investments that they're comfortable with, that they can tolerate. Right? And you're not either in the market or not. You're not in low interest rate bank accounts and bonds. There's a lot of in between that I don't think a lot of investors are aware of. You have things that are non-correlated to the market or less so. We see investors say, I can't take any more of the stock market. It's just too volatile for me. And so they go all the other way of the pendulum swing into low yielding bonds or very low-yielding bank accounts.
Yeah,
There's a lot of in-between there, Steve. Mm-hmm. There's a lot of funds, real estate funds, some of that are very conservative and really very well thought out. Some of the pension funds use these, and they're only liquid each quarter.
Okay.
There's a lot to be said for that, but that means that you have a very low correlation to the stock market. So you have super volatility in some stock market investments, all the way down to a lot less. And I think that what I'm getting at, there's a lot of income investments, dividend yielding stocks, mutual funds that people should be investigating that don't have a great correlation to the market that you could really live with and you get a little better yield. Because you only want to get yield if you can live with volatility. But some of these funds have such a low correlation and low volatility, I think they should be looked at.
So when you talk about low correlation or no correlation, correlation just means if the stock market's doing this, it's following it. But when the stock market goes down, that no correlation continues to move forward and you're not losing money, that's non-correlated, right?
That is either low correlated or non-correlated. But what I like to do is very simply ask the advisor, say, show me a chart of 3 years, of 5 years of the S&P 500 against the investment that you're showing me or that you're looking at. And it could be very, very lightly correlated or not at all. Those are the kind of income investments I think people should take a look at a lot more often.
Now, there's other non-correlated investments. What other ones do we have available to people out there today?
Well, you've got energy, you've got various real estate investments and mutual funds that we just talked about.
Okay.
But, you know, basically, those are the main investments that I like to talk about. I mean, you could get into what Yale, the big endowment funds, utilize, and they get into timberland and a lot of commodities. I don't really go there. The average person, I think you just want to stay with energy, you want to stay with real estate funds, you want to stay with bonds and short-term bond funds.
Okay, so what if somebody wants something real stable? I heard of these things called Delaware Statutory Trust. Can you help us with that? What's that mean?
Delaware, DST for short.
Okay.
That is a business trust.
Okay.
And it's a business trust with real estate in them, commonly used for 1031 exchange. It's kind of to meet the baby boomer demand that have been accumulating all this income property, Steve. And now for health reasons, or they don't want to maybe run to Home Depot as often, they're not as excited about managing. Some of them have turned into headaches. You can sell those properties, bring the funds into via IRS 1031 exchange into a DST, a business trust that has highly vetted institutional grade real estate in it. However, the reason you brought that up is because a lot of our clients, even if they're not coming from income properties, you can still put cash into these and get a nice 5 or 6% tax advantage distribution.
My understanding is also it's inflation adjusted income.
Each year it's inflation adjusted. Great property. You may see 8 Walgreens in a DST, or there was an ESPN headquarters they did last year, long 20-year leases. You may see CVS Pharmacy. You may see single residential. You may see 300-unit turnkey residential unit in a DST. It's not liquid, Steve, so it has to fit your needs, your portfolio, but it creates income. And what we're looking to do when we sit down and put a plan together is they're trying to create income. It could be for long-term care or assisted living or their next move that they're about to make. We're trying to put money to work. We're trying to put these investments to work to pay bills, to pay expenses, to pay mortgages, and also to see how everything flows, of course, in the end on your tax return.
Don, thank you so much for being on the show and sharing this information with our viewers. It's wonderful, especially this time of the year.
Thanks for having me.
Now, if you're looking at, hey, how do I lower or eliminate my taxes, or just finding a better yield because you can't find any right now, you want to go to our website at the Silver-Haired Tsunami. You can also find information on Mr. Meredith at Tactical Income. Now, one of the big things I want to put out to you, this is the time not to only talk to your tax person, but have your financial advisor in the same room. Why? Because they could work it together. You got to remember, your tax person, CPA or otherwise, is typically not investment licensed, so you don't know the facts about each individual investment. If you have them both together, you can make sure you get more income and pay less taxes. Stick with us. We'll be right back. You know what? The 3 words, productivity, profit, and purpose. Many people look at these things, they want to be productive, they want to be profitable, and they want to have purpose, but they're having problems. And you know what? This is the reason why we have Steve Rogers on today. He leads Alchemy Advisors. He works with individuals in business, and it's 2 different things when you're looking at profit, productivity, as well as purpose. So Steve, welcome to the show. I'm glad you're here.
Hey, thanks for having me.
I can't wait for you to tell us all about it.
Yes, thank you. Well, it's the 3 Ps, as I call them. So Alchemy Advisors, as you mentioned, I picked the name Alchemy Advisors of my company because if you've ever read the book The Alchemist by Paulo Coelho, he talks about in the olden days how the alchemists could turn lead into gold. And they took something of value and turned it into later, better or more valued, perceived value, such as gold. And from my company, Alchemy Advisors, I work with companies and I work with individuals. And I thought, well, how can I boil this down? Because everyone has common things they're trying to accomplish in life. And I thought, well, Everyone wants to be more productive, as you said. People would like to have more profit in their business or their life. And profit just doesn't have to be money. Profit can be profit in relationships, profit in your health, profit in how you experience life, and then purpose. And I think when you have those first two, some people are wondering why they don't feel purposeful, like why they don't feel fulfilled. So I wanted to make sure that I had this purpose thing really tied in, whether it's companies or individuals. So
you're really talking about peace of mind, joy, and fulfillment.
Yeah, and that's exactly part of purpose, because I have found, as I've been in my career managing large companies, being a CEO, owning my own business, and now a consultant, that people sometimes are just driving. Drive. They're trying to get that almighty goal, and they get there and they go, is this all there is?
Yeah.
And they're wondering why, when they got to that point, why there wasn't more fulfillment. So yes, finding more joy, more peace, more harmony, in today, not tomorrow, not next week, but today.
So this is different for individuals and businesses. So what's the difference?
Well, when you go into a company, or if I go into a company, I have to look at the CEO, the executive team, and then the leadership team, and then the salespeople and the employees. And that's a moving organism. I mean, that's a whole infrastructure. So it has to start at the top. So we first look at what's in their business plan, what's in their mission plan, and how does that get regulated out to the team. And so I have to work with various people to make sure that all comes together. With an individual, it's much easier as far as communication goes, because you know exactly where that person is in any given moment. But I still have my clients make a life plan, make a business plan, but it becomes very personal, tied into maybe their marriage, maybe their family, their health, and it gets very personal in one-on-one coaching, because people, if they're not being real, if they're not sharing with me where they're productive, where they're purposeful, and where they're profitable, I can't help them get to the next level. So it's much more intimate, probably on a one-on-one basis, and it ties much more into their spiritual connection to their higher power, into their marriage and their family. So typically when I'm working with individuals, I find that it gets more personal than it does to profit and business-wise.
Now, you also rely, I could see what you're doing there, but you know what, I know your background and you're outstanding.
Thank you.
But there's certain areas that you're not an expert in.
That's right.
And you don't plan to be. So how do you deal with that when somebody needs that extra help?
That's a great question. And I'm like a general contractor. I'm not a specialty in a plumber, I'm not an electrician, all of those things, but I know people who are. So I have a close circle of people and friends, such as you, who I know is phenomenal in wealth management. I have another client of mine who's phenomenal in exchanges and 1031, people that are involved in defined benefit plans, attorneys. So when someone is deficient in an area of their life, or they're not feeling like they have the expertise they need, I have friends, associates, and other people that I work with who I refer them out to, who I've worked with over the years at all different levels, whether I've used them for myself personally with my family and my own portfolios, or if I've used them in businesses that I've owned. So I don't try to be the expert for everybody. I do have enough general knowledge that I know when I need to pull those people in. And then I'll refer my client to those particular people in a conversation, where we'll get on a phone call with them directly, or I'll just connect them directly in a one-on-one relationship.
Now, people tend to, you look at life coaches, you look at people who are business coaches,
right?
And you see people that go from one business coach to the life coach to the next coach, and they never really get anywhere, but they just want to have the next thing.
Yes.
Okay. What do you say to people like that?
Well, I think that the way I do that is I have a report card. I have it's called my 4 Bs. So I have my 3 Ps, which is productivity, profit, and purpose. And then the 4 Bs is where we're rating your body, your being, your bonds, and your business. So they actually have a scorecard to see that they are making progress. And when people can see they're making progress and they're actually making traction, they know if they're staying on that course, anything you can track and measure, you can improve upon. So what I find with my clients, when I have this real scenario that they show that their life is getting better, and it's resulting in better marriages, better family relationships, more involved in the community, better finances, and they can track it because of my 4 Bs, it usually helps people not jump to the next thing so quickly, because I'm keeping them accountable on a weekly and monthly basis to what it is they said they wanted to create in their life.
Steve, thank you so much for being on the show. This is wonderful to help people with their productivity, profit, and purpose, because with more of that, people live happier lives.
I agree.
When you see those pictures of Uncle Sam and it says, I want you, well, he actually wants your tax dollars. That's the IRS. You know what? And as we get older in life, we've either got rental properties or primary residence, and we've had them for 25, 30, 40, 50 years, and you know what? We've never sold them. And you know what? When we go to sell, there's a lot of things we don't know. And those things that we don't know could cost us thousands of dollars to the IRS. So we don't want your money falling through the cracks. So we have a specialist here. His name's David Greenberger. He's with 1031 Exchange Advantage. And we're happy to have you on the show. But there's one of those things out there. It's been a tax code forever. It's called the 1031. And many people don't know how it operates, or they have misconceptions about it. And we brought you on the show to help us with that, help us educate our viewers so they can understand, hey, there's something else out there that could save me a lot of money.
Well, thanks, Steve. Good to be here. Appreciate it.
Now, with a 1031 exchange, it's a tax code. People think that, hey, if I have a condo, I have to buy a condo, and that's it. But that's not true, correct?
That's not true. No. 1031 exchange allows people to sell investment real estate in exchange for other investment real estate without paying a penny in capital gains taxes. And you can exchange from any kind of real estate into any other kind of real estate. So long as you plan it properly, you can get through it.
Now, you said capital gains. Now, if people have been renting a rental property, they have what's called depreciation. Mm-hmm. So they have the ability to defer that depreciation as well?
Yeah. The exchange also allows you to defer the taxes associated with depreciation, recapture tax. Yeah.
Now, as a financial professional, I hear this a lot. Some people go, you know what, I've got some just basic land that I was planning to develop and, rent something out on it, and I never did. Okay, can I sell that and 1031 exchange it into a rental property?
Yes, you can.
Can I 1031 exchange it into a rental property that somebody else manages?
Yes, any kind of rental property or any kind of property at all for any other kind of property.
Now, here's one other thing that I just had a client, he said, I wish I'd met you a year ago, because what he did is he had a gas station. He owned the property that the gas station sit on, and he also owned the business. And what he did is he sold them together. Mm-hmm. And when I sat down and talked with him, he didn't quite understand, and correct me if I'm wrong here, that he could have separated the sale into two sales. One was the actual business, and the other one was the actual property. And the property portion could have been 1031 exchanged?
Correct.
Which means he could have avoided the taxes, the recaptured depreciation?
Right.
So in his case, that could have saved him about $700,000 in tax dollars.
Yes. And the taxes on the real estate are going to typically be the larger chunk of change anyway. So it's good to get it structured properly, where you put as much value on the real estate in the contract as you can, sell a business separately, and exchange the real estate into any other kind of real estate that's going to work well for the client at that time. And we go through what's a needs analysis of what's good for the client. What are they looking to get into? What are they trying to accomplish? You as a planner should know, and I'm sure you do, that you can achieve goals by asking the right questions.
That's true. Well, you know what? A lot of times people don't plan the A to the Z, mm-hmm. meaning where's it going to go after I do the exchange?
Right.
Because they just think, hey, it's time to sell and I want out.
Correct.
But I'll 1031 exchange it. Now, here's a big question. If I go and sell my property, how many days do I have to identify the property I want to move into?
Well, you have 45 days from the date that you close on the sale property to identify a property that you're going to reinvest in. And the reinvestment is what's really critical, because that's what finishes the exchange, and it puts your money into something else that's hopefully going to serve your purposes better.
Now, how many days, if I say I've identified this one property, how many days do I have to close that? Do I have 45 days to close that
one? You
one?
have a full period of 180 days to finish the exchange.
Okay.
So the exchange begins when you close the sale property. So the date of the closing is the gun goes off. Mm-hmm. And 180 days later, the exchange has to be completed, which means you have to have reinvested and closed on a new piece of property.
Now, I get to my 180 days and I can't get this thing closed. What are my options?
You can sit down and cry, which you'll do after you see what your check is to the IRS. So the key is to really plan it ahead of time to make sure you don't fall into that category.
Now, one of the options that people have, that you have on your website, are what are other options people can 1031 exchange into if they run into this issue?
Okay, they always have their own personal choice what they want to reinvest in. So they may want to get back into something that they just got out of if they are comfortable with that, or they may have another kind of real estate that they're comfortable with that they want to try to invest in. They can look to buy something that ultimately down the road becomes a property that they use, which is possible.
Okay.
So they could plan to buy and exchange into a retirement property. They can't use it immediately, but they can make the investment and then change the use. Mm-hmm. So that's another category. There are properties that are managed by third parties, they're rental properties, but they're managed by third parties and they're fairly turnkey, meaning they have a tenant, they have all the improvements, they're managed by a third party. You're basically just collecting a check and it's another piece of real estate. There are other kinds of investments that are commercial properties that you can own a share in with many other investors, but these are really AAA properties that are, long-term leases from Fortune 500 companies, like a Marriott hotel or a Walmart or a Jamba Juice or an AT&T store, those types of things, and you own a share in that investment with many other investors, but less risk.
So some other uses, and we were talking about this before we were on the show. You have somebody that has, been in their home property, their primary residence for a long time, and they're saying, okay, I've got $500,000 in an exclusion, I've got a $200,000 basis, but my property is worth 1.3, so I have $600,000 in gains, and the IRS wants a check for $210,000. How do they go about, for example, changing the use in order to be able to 1031 exchange a portion of that house?
Okay, so what they need to do is plan that ahead of time. If they're in a property and it's been their residence for a long time, they may have a home office that is in the property or some other business use, like a garage business or citrus or agriculture behind the property. The portion of the property that's not residential, meaning the business portion, that they can document can be exchanged.
Okay.
So if they had a home office, you can tell them how to file that with the IRS so that it's recognized as a business.
That's an 8829 tax form.
Okay,
Yeah.
and then once that's concluded, that piece can be exchanged. So they would go ahead and sell the property the way they normally would, but exchange just that portion of the property that qualifies.
Now, could they rent half of the house out too?
They could. They could. That'd be another way to convert the property into an income-producing, in part, property, and that part could be exchanged. They can also move out of the property and rent the entire property, assuming they have a second home or another residence that they can move to. So that would convert the entire property and allow that to be exchanged.
Now, for more information on 1031 exchanges and how they can make a difference in your life, you want to go to the Silver-Haired Tsunami website or go to the 1031 Exchange Advantage website. Hey, what a great show. We had Alan Nevin, research economist, talk to us about what's going to happen with our new president. Not much, obviously, but 2017 in real estate was a good segment there. Next, we had the alchemist, Steve Rogers, talk about how you can be more productive, more profitable, and have more purpose in life. You want to see that one. And reduce or eliminate taxation. Don Meredith, hey, he showed us the way. Then we had David Greenberger talk to us about information that can make a difference if you're selling your own residence or your rental property and save you thousands of dollars while doing it. You know what? Go to the Silver-Haired Tsunami website, follow us on Facebook, a lot of great information. You can see past segments. This is that time of year where you want to sit down with your tax professional and your financial advisor to get for information you need to know to lower and eliminate taxes. Stick with us, we'll see you next week.